Incentives. We all know wage is a fair day's remuneration for a fair day's work. A wage incentive scheme is described as a method of payment for work of an acceptable quality produced over and above a specified quantity or standard. In this lesson, we will learn the concept of incentives, the incentives under various heads, the individual and group incentives, and the compensation elements of professional employees. After going through this presentation, you should be able to analyze the concept of incentive, explain the classification of incentive, describe short and long-term individual incentives, discuss group incentive plan and wage incentive plan, understand the compensation for professional employee. Incentives are monetary benefits paid to workmen in recognition of their improved performance. An incentive scheme is a plan or program to motivate individual or group performance. An incentive program is most frequently built on monetary rewards, incentive pay or monetary bonus, but may also include a variety of non-monetary rewards or prizes. The International Labour Organization (ILO) refers to incentives as payment by results, but it is appropriate to call them incentive systems of payment, emphasizing the point of motivation, that is, the imparting of incentives to employees for higher production and productivity. Unlike wages and salaries, which are relatively fixed, incentives generally vary from individual to individual and from period to period for the same individual. Direct compensation includes the basic salary or wage that the individual is entitled to for his job, overtime work and holiday premium, bonuses based on performance, profit sharing and opportunities to purchase stock options, etc. Indirect compensation includes protection programs like insurance plans and pensions, pay for time not worked, services and perquisites. Monetary incentives have an important contribution to make within the total motivation pattern. Some of the non-financial incentives are good human relations, self-respect, recognition, status, sense of belonging, appreciation, higher responsibility. All these motivate workers to raise their productivity. In an individual incentive plan, the rewards of incentives are based solely on individual performance. It is the extra compensation paid to an individual over a specified amount for his production effort. Such a system is feasible only where an individual can increase the quantity and quality of his output by his own individual efforts, and where his output can be measured. Group or area incentive schemes provide for the payment of a bonus either equally or proportionately to individuals within a group or area. The bonus is related to the output achieved over an agreed standard or to the time saved on the job, the difference between allowed time and actual time. In large groups, it is often inevitable that there will be a slacker who can disrupt the functioning of the whole group. The organization-wide incentive system involves cooperation and collective effort of the employees and management in order to accomplish broader organizational objectives. The main feature of the schemes where income vary in proportion to output is that any gains or losses resulting directly from a worker's output accrue to him or her. The straight piecework and the standard hour systems are the two popular incentive schemes which come under the first category. Straight piecework method is the simplest, oldest and the most commonly used method. Four allied but different systems come in earning varying proportionately less than output group, namely Halsey, Rowan, Barth, and the Biddocks. The Halsey system, which was developed by F. A. Halsey, provides for the fixation of a standard time for the completion of the task. For the work done in correct time or more, the actual time rate is paid. Thus, the minimum wage is guaranteed even if the output falls below the standard. Under the row 1 system also a standard time is allowed for a job and bonus is similarly paid for any time saved. Under the Beddock's point system, the standard time set is divided into a number of points at the rate of 1 minute per point. Earnings varying proportionately more than output category includes two methods. 1. The high piece rate. 2. The high standard hour system. Under the former, the earnings of the worker are in proportion to his or her output, as in straight piece work, but the increment in earnings for each unit of output above the standard is greater. Earnings differing at different levels of output group include several schemes. These systems can be best explained by describing how earnings vary from minimum to maximum at different levels of output. The Taylor differential piece rate system was introduced by Taylor with two objectives. Firstly, to give sufficient incentives to workmen to induce them to produce up to their full capacity, and secondly, to get rid of the fear of wage cut. The Merrick differential piece rate system is a modification of the Taylor system with 3 instead of 2 rates. One large step is broken into 2 so as to encourage new and average workers. Premium and task bonuses has been devised by H.L. Gant and is the only one that pays a bonus percentage multiplied by the standard time. Long-term cash incentive pay is a performance-driven award that pays compensation based on a 3 to 5 year performance period and calculated as a multiple of base salary. The award of stock options represent the most commonly used form of long-term performance incentives. The grant awards are designed to incentivize the executive to perform because he or she has a long-term stake in the future of the company through eventual stock ownership. The taxation is based on the spread between the fair market valuation of the stock on the exercise date and the controlling exercise price. Non-qualified stock options are governed by IRC Section 83 and provide a performance compensation method to acquire shares of the corporation's stock, a non-transferable equity interest either at a discounted price in the money or at the market value. Incentive stock options (ISOs) are governed by IRC Section 422. ISOs are considered executive friendly. If all statutory requirements are met, any income received upon exercise will be treated as a capital gain. Restricted stock awards are outright grants of stock for cash or nominal cost to the executive with specific restrictions on sale, transfer, and pledging. SARs are rarely used and differ slightly from phantom stock and stock options. SARs entitle the holder to the spread in fair market value between the grant date and the exercise date. Restrictive stock units are rarely used by most companies. The holder of the unit is entitled to the spread between the price of the underlying stock on the grant date and the fair market value or formula value of the stock on the settlement date, which is not the vesting date. Performance unit plan awards are contingent upon the attainment of corporate performance goals, usually measured over a period from 3 to 5 years. Performance share plans function similarly to performance unit plan awards. However, the executive is granted contingent shares at the start of the 3 to 5 years performance period. Group incentives are as common as individual plans in industrial establishments. Any individual scheme which has already been discussed may be applied to a group of workers, but the most common is the piecework system. It is a plant-wide incentive scheme developed by Joseph Scanlon of the United Steelworkers of America in 1927. The basic concept underlying the Scanlon plan is that efficiency depends upon plant-wide cooperation. The purpose of this incentive plan is to develop teamwork. It has two main aspects: A. Adopting a measure for increased productivity. B. Sharing the gain accrued from that increased productivity. The objective of the plan is to devise the formula which will most adequately reflect the prospective efforts of workers and management as a whole. The Scanlon Plan is recognized as a system of total organization development, which consists of assumptions about human behavior, a set of principles for the management of organizations, and a participative process of implementation. The philosophy of the Rucker Plan is similar to the Scanlon Plan, but the bonus computed is more sophisticatedly based. There are two major differences between the two plans. The standard under the Rucker Plan is based upon a careful study of accounting records and is not considered bargainable. The IMPRO-share, improved productivity through sharing plan, is an industrial engineering-based productivity measurement and sharing plan developed in the mid-1970s by Michel Fein. This plan uses easy-to-obtain past production records to establish base non-incentive employees, or any designated group. Wage incentive plans may be discussed as 1. Plans for blue-collar workers, 2. Plans for white-collar workers, 3. Plans for managerial personnel. Incentive plans for blue-collar workers. Every employer wants his workmen to do the maximum work they are capable of doing. On the other hand, there is a feeling among the workers that an increasing effort benefits only the employer, even when they are employed on a piece rate basis. The result is that they never produce to their full capacity and, in most cases, put in the minimum necessary work. The payment of bonus to indirect workers, however, poses a serious problem because the output of many of them cannot be accurately measured. Incentive plans for white-collar employees or salesmen. The salesmen are usually given incentives in the form of sales commission. The straight salary method is not an incentive plan. The salesman is simply paid on weekly, monthly, or on yearly basis. Under the straight commission, the salesmen are paid on the basis of sales effected. That is, they are paid for results and only for results. Incentives for management. In many organizations, the managers are paid bonus. There are two types of bonus plans. One, determined by formula, that is, some criteria like increased sales, and the other, determined by some discretion used in allocation of bonus, that is, paid on more or less permanent basis. The bonus plans are generally reviewed annually to make them more effective. Professionals are employed in a number of different industries and job settings, including biotechnology firms, pharmaceutical companies, large-scale manufacturing plants, private research institutions, government laboratories, and universities. The biggest determining factor is a professional's education level. Other factors that influence an engineer's compensation include productivity levels and the amount of time an individual has been on the job. A successful scientist who works at a facility for several years may be able to obtain a higher paying position even without an advanced degree. Sales and marketing compensation plans are aids to rather than substitutes for effective motivation. The basic appropriateness of a compensation plan is important, and so is the way it is implemented and administered. In established companies, it is rarely necessary to design new sales and marketing compensation plans, and executives concern themselves mainly with revising plans already in effect. Most changes are minor, instituted to bring the plan and marketing objectives into closer alignment. Now let us check if we have understood the various concepts discussed in this lesson clearly. Indirect incentive includes the basic salary or wage that the individual is entitled to for his job. Right or wrong? Wrong. Direct includes protection programs, insurance plans and pensions, pay for time not worked, service and perquisites. Right or wrong? Wrong. In Rowan system, a standard time is allowed for a job and bonus is similarly paid for any time saved. the bonus is determined differently from Halsey system. Right or wrong? Right. Before we end, let us briefly revise what we have studied so far. Incentives are monetary benefits paid to workmen in recognition of their improved performance. An incentive scheme is a plan or programs to motivate individual or group performance. Direct compensation includes the basic salary or wage that the individual is entitled to for his job. Monetary incentives have an important contribution to make within the total motivation pattern. The organization-wide incentive system involves cooperation and collective effort of the employees and management in order to accomplish broader organizational objectives. The Halsey system, which was developed by F. A. Halsey, provides for the fixation of a standard time for the completion of the task. Under the Rowan system also, a standard time is allowed for a job, and bonus is similarly paid for any time saved. The merit differential piece rate system is a modification of the Taylor system, with 3 instead of 2 rates. One large step is broken into 2 so as to encourage new and average workers. Long-term cash incentive pay is a performance-driven award system that pays compensation based on a 3 to 5 year performance period and calculated as a multiple of base salary. Performance unit plan awards are contingent upon the attainment of corporate performance goals, usually measured over a period from 3 to 5 years. Group incentives are as common as individual plans in industrial establishments. Any individual scheme which has already been discussed may be applied to a group of workers. But the most common is the piecework system. Professionals are employed in a number of different industries and job settings, including biotechnology firms, pharmaceutical companies, large-scale manufacturing plants, private research institutions, government laboratories, and universities. The biggest determining factor is a professional's education level.